Welcome back to the More Doors podcast. Today is episode 38 with the one and only Mark Allen. We're going to get into some really interesting stuff about how brokers in the Dallas MSA work with investors, and Mark is just the guy to tell those details to our listeners. We'll be back with all of that right after this. All right, welcome back to the show. Super excited today. I'm back with my best buds. I feel like I haven't seen you guys in forever, man. I missed you.
I know. I'm getting like nostalgic vibes over here. I feel like I haven't seen you guys in forever.
I'm feeling nervous.
I haven't seen you guys since last month.
I know.
That's crazy.
Yeah.
Weird.
Whoa.
Really weird.
And I just looked at our text exchange the other day. We hadn't texted each other in 3 days. I started to go through withdrawal.
Well, but we've texted on the other thread.
Yeah, it's true.
Yeah.
That's true.
So
That's true.
It makes up for it. It's just not as intimate.
Nice. So typically, I would open up the show by saying I'm joined with my very handsome, very intelligent co-hosts, and that it goes up a few notches with this guy in the house. Number one, Mr. Mark Allen from GREA is in the house. Before we get into our discussion, it's definitely time to say big kudos to our sponsors here with the show. First and foremost, Deep Blue Capital. Go check us out, deepbluere.com. Do that right now because you will see our next investment opportunity has been posted to the site, and it is absolutely live.
Click that current offerings tab and go check out our latest.
Go check out the deets. As a matter of fact, by the time we're actually about 5 hours away from our presentation this evening, which really, really excited about. By the time you listen to this, it'll be all out in the ether. So go download the recording, check out the presentation deck, hit us up if you got any questions, and just know that this will be the first of what we hope will be several in a very interesting market here in 2024.
Yes, sir.
So Deep Blue Capital, thanks to Deep Blue Capital. Also want to say fresh with, look at these mugs. Hold on.
So slick.
You like that? Tour Studios. Go check out Jesse at tourstudios.com, T-O-R-E studios.com. Tell him he's got the best beard ever. He'll probably still charge you the same, but he'll appreciate the compliment. Jesse does a great job. Check out the studio behind us, all the shorts, all the amazing content that he puts out. His book of business is growing like a weed, and he's a great guy. So go hook him up with some business, and he'll take good care of you. All right. Whew. Thanks to our sponsors.
You still have it down.
I do?
Yeah.
I feel like I was a little rusty.
No, it sounded good.
It's okay?
Really
Yeah.
good. Well rested.
Well rested.
Yeah,
yes.
I can hear it in your voice. That voice has been well rested. Very energetic.
Radio voice.
Yes.
Nice.
Absolutely.
What are you saying? He only has a face for radio?
A face.
I definitely have a face for radio. Yeah, a head for radio.
Yeah.
All right, Mark, welcome to the show.
Yeah, man. Thanks for having me.
I was thinking the other day as we were getting prepared for this, we sat down at the Hacienda at the service road of I-35 probably like 6 years ago, right?
Yeah.
That was a
I
long
think it was
time.
19, yeah.
Was it 19?
Uh-huh.
Amazing.
We toured Village on University in Denton. It was called something else at the time.
Yeah, that deal's already changed hands again already since then, right?
Yes.
Like a year or so ago?
I've sold it twice, yeah.
Nice. Good
Yeah.
for you, man. So, Brian, why don't you jump in here, brother? This is typically your part of the show.
I was going to jump in and just comment on how good looking this side of the table is. You monsters are making us look terrible today.
It's hard to talk in the mic and talk.
We're the
to
bookends.
So, for the people who don't know Mark Allen, massive, massive name in multifamily and commercial real estate here. I never like to speak for people. Kind of give us your backstory, who you are, how you got to where you are. You have an amazing journey. Share with us just a little bit, kind of the elevator pitch on who is Mark.
And don't be humble.
Braggadocious.
I grew up in Orlando, and my father was in real estate, so I have the roots. Actually, my grandparents as well. His parents were local realtors. They ran a residential brokerage. So he was in construction. In Florida, it's not the Wild West like it is here in Texas, but in Florida, he got his GC license, and he started building custom homes. I think when I was growing up, he had 3 rentals. So generally, he was in real estate. And so I went off to college and went to West Point, the U.S. Military Academy. And at West Point, in ROTC in particular, they give you a career starter loan, because if you're committed to coming out in the military, they say, hey, you got a guaranteed paycheck. We'll pull from that paycheck and to pay down this loan. So anyways, and I think it was a 5-year loan. It was $35,000 at 0.5% interest rate. So, I mean, incredible.
Yep.
During the recession, my dad said, hey, it's a great time to buy real estate, but he got crushed. He had construction loans and lines of credit out, and he got to a point where basically he couldn't service them because they were $1 million plus homes, and nothing was selling in Florida. So anyway, someone came along who's actually, they said they're flying in town. They wanted to connect with me, but they buy distressed debt, and so they bought a lot of his loans, and they said, hey, we're here to help you. And it actually was a blessing, because they gave him construction projects like, hey, we've got a half-built home, or we've got a shopping center that needs some work, because they would take control of the assets. And so anyways, I mean, through that, he asked them, he said, hey, my son's got, $35,000. Do you guys have anything that you would offload? And they had a 2-bed, 2-bath condo in Melbourne, Florida. So anyways, that got me rolling. I bought this condo for $20,000. I put a little bit of money into it. I was in college. Fortunately, my dad, being in construction, helped me out a little bit. He finished, he had his subs go, finish the paint. He put appliances in, so on and so forth. So anyways, I mean, that got me rolling. I rented to a Section 8 tenant. Generally, I managed it. If there was some kind of like maintenance request, he would help me and send me one of his subs. So, from there, I got out. I was in the Army. I mean, if you want to know all this story, I went to a Kiyosaki seminar down in Austin, Texas, and that was right. Actually, that was after. When I was in Afghanistan, I was big on bigger pockets. I was just reading and absorbing a lot of material. Not that I was active posting. But I bought it was like house hacking. I bought another 4-bedroom house, rented while I was in Afghanistan, rented the bedrooms to buddies with a VA loan, which is great program for veterans. And then I went to the Kiyosaki seminar once I got back. I went $20,000 in credit card debt. I was probably making, whatever my lieutenant salary was, maybe $55,000 a year. And so I was like, shoot, I got to pay off this debt. And, generally they give you a mentor to connect with or whatever, but it was a joke. Don't recommend that to anyone. So what it did was light a fire to like, hey, you got to go do deals now and pay off this credit card debt. So that's what I did. I mean, I had no money. My dad still, couldn't help me out. So did wholesaling, did subject to. So anyways, I was just doing kind of fix and flip with little to no money down. I hung on to a couple, and that got me rolling. So moved to Dallas, did some single family home flips. I ended up getting my license in early 2016 because I was like, hey, you never know, not like I was doing wholesaling anymore. I know there's some rules there or whatever. And I was approached by a guy who is now at a boutique shop, but was with our team at the time. And we got together. He was a former military guy. And I was like, hey, I really want to do something different. I'd like to buy multifamily. And he was, he was asking questions like, this guy doesn't know anything. And so long story short, he said, why don't you come join us and be a broker? I'm like, well, that's commission only, right? And he said, yeah. So I was like, well, from some of my investments, I got some money saved up. So I'm like, I'll do this for a year, and if it works out, great. If not, I'll go find another job in corporate America. So anyways, I closed 8 deals my first year, and some of those were bringing buyers to off-market deals, and we split those 50-50 in-house. But anyways, I was like, hey, this is where I'm supposed to be. I'm going to keep rolling with it. So generally, that's how I got rolling.
Wow.
Yeah, and that was 2000. I started 16, but officially into 16, but officially 2017.
So your first year you did 8 deals. What was that learning curve, right? Because you weren't in multifamily yet.
Yeah. So I had made the commitment probably summer of 2016. Hey, this is what I'm going to do. After having that meeting, I had a job where I was selling software. It was not to get into the weeds, but virtual prototyping, like predictive analysis software, not real estate software. And so I used that. I had flexibility in my schedule. So for lunches, if I was around, I would come in and meet with our analysts. I knew for me, like, okay, I have sales and marketing experience and from doing direct mail marketing, like all this stuff on the single family side, but also with like more business to business sales experience. And not that I had much, I had 2 years worth. But leverage that. So I was like, my weakness is going to be this finance aspect. I need to learn that. I need to learn how to value and underwrite deals. So I'd meet with the analyst, 3 times a month and he just walked me through. And then it was kind of a crawl, walk, run where it's like, hey, look over my shoulder. Okay, I'll look over your shoulder. And then now you do some and bring it back to me and we'll go through it together. And, I think with time, you start, as you have conversations with buyers, you start to, understand it, underwriting a little bit more. It's more of an art than a science sometimes. But generally, I think as far as the learning curve goes, for me, that was the biggest aspect that I had to figure out. So
100%.
So that was 16?
Yeah, so it's 2016.
So 16, now we're what, 9 years or 10 years or 8 years later?
Yeah.
What does that look like?
What do you mean?
So 16, you got into the multifamily commercial side, brokering.
Yeah.
So take us over the next 8 years.
Yeah.
Because it's impressive.
That's right. He's trying to get you to not be so humble.
Yeah.
Yeah, I mean, if I would have known what I know now, like, man, Dallas, Fort Worth, there's a couple of really competitive brokerage markets, specifically in multifamily. And multifamily is kind of like the redheaded stepchild of commercial real estate. There's a lot of differences, I think, or nuances that differentiate it from, commercial assets, industrial, retail, and office specifically. Generally, I mean, I don't know, man. If I were to go back, like, and I knew what I knew now, like, it would have been very daunting. There's just a lot of competition. It's tough out there. But I came in swinging, and I'm like, I just didn't know what I didn't know. It was like, fake it till you make it. And fortunately, I had, we have some very experienced brokers on our team with, 10 plus years experience. So I was able to leverage them and bring them in and, and help me. So fortunate for that. But I mean, there's probably 100 brokers out there. And then, I'm going to say 20% of those brokers probably do the majority of the deals. And I've kind of carved out my space in the B and C class, specifically kind of sub 30 million. Mm-hmm. So it tends to be a little more private capital, like syndicators versus, some of the institutional.
Yeah.
And what does a typical year look like for you in terms of sales and?
It's definitely changed. At the peak of the market, we were doing almost $1 billion in sales, primarily again middle market, which is sub 50 million. So we were doing maybe 12 million in revenue at the peak, and then now today I think we did this past year maybe 5 million. Mm-hmm. So the market's changed considerably. Yeah. As far as number of deals, we were down about half, and revenue a little bit over that.
Yeah. So things change, and they'll change back. These are the cycles. Yeah. I'm actually really interested in. So you jump into a space that is a big unknown for you at the time. You have what sounds like one really great meeting, and you're like, I'm just going to take this opportunity. We're all entrepreneurs as well, and we've all taken that sort of leap into the unknown. Yeah. And we're still doing what we do today, so we haven't totally failed. That takes a lot of courage. It also takes a lot of discipline. And I actually didn't know this about you, so I appreciate you sharing. I didn't know that you were a West Point grad and all of that. How do you think that military background, from the discipline and structure standpoint, how do you think that benefited you taking the leap into an entrepreneurial pursuit?
I mean, the military is very socialistic. You show up, you do the right thing. I mean, maybe a little bit different on the enlisted side. So I can't say it's like there's a whole lot of risk taking in the military, but generally just the discipline aspect. That it's just like sports. I feel like it's a team aspect. Generally, everyone's competitive. They want, the culture is that way. They want to, drive to be the best soldiers that they can be. So I think those aspects, just the waking up every morning, making my bed, all those kind of things, because it's sales. I mean, you guys are in it, is a lot of the same skill set. So it's doing those little fundamental items day in, day out. And of course you can get into the details there, but generally it's just
I think it's just really interesting, the patterns that people have when they come from for example, like you said, high-level sports or military backgrounds or things like that. They get into sales, and we work in the residential sales business as well. And one of the most difficult things about running a residential sales team is just salespeople in general are hard to lead. Matt's led salespeople his entire career, and just fundamentally getting people to do things that they know they should be doing when they're not motivated to do them sometimes is incredibly difficult. But when you come from a culture where you're uncomfortable making excuses, it's amazing how that shows up in your entrepreneurial pursuits.
Yeah.
And so I think that obviously that has a huge impact.
I love that. It's one of those things, right, where if people did everything you asked them to the first time you asked them to do it, the 3 or 4 of us would be out of business.
Oh yeah.
Right. But you've got to find, and I think this kind of comes down into like what we're, some of the things we're working through with grit and the expectations that we have of some of our partners and cross-functional business colleagues. You've got to have the daily discipline to do the little things, because little things over time turn into really big things, right? The lead that you didn't follow up with, the application that you didn't send, the rent that you didn't knock on the person's door, right? Those little things add up over time. Or on the flip side, in like Mark's business, and I want to ask you something in a second, like making the dials, right? Making the phone calls, doing the outreach, etc. I want to ask you a little bit, Mark, and I think this was you, but forgive me if I'm wrong. I remember seeing a video, I think I was on LinkedIn, and I'm pretty sure it was you a couple of years ago. You had a bunch of guys cold calling in the business, in the office, and you made them do push-ups when they didn't do enough cold calls that day.
Love that.
Did I remember this correctly?
Yeah, so we rolled out just accountability meetings, and so we had group subset into experience level. So that meeting in particular was some of the newer to market agents, and we're maybe a little bit tougher on them than some of the others. But and part of that meeting is not just going through KPIs and accountability there, but it's also talking through pipeline and deal stories and getting help. That group of folks committed to achieving a certain amount of calls, meetings, whatever, and those who were doing their push-ups, or I think there was our only female broker in there doing like squats or something.
I love that. So how have you? What's been your, not just your brokerage journey, Mark, but like your leadership journey? Your rise in the market has been meteoric, if you will, and I think in the last 5 years since I've known you, right, your brand has gotten so strong. And I think back to the videos, I think a while back, I love your videos, number one, when you're bringing a new deal to market, but your following's grown, your LinkedIn presence is huge. Like, how have you thought about and what kind of approaches have you taken to really build your brand personally and with GREA?
Yeah, and it's very different. Commercial real estate, I feel like, generally is antiquated compared to residential. And generally, like it serves my niche as far as some of the marketing activities that I'm doing. I even, had some fun with it. Like you guys toured Regency, and like the very beginning of the property video, this was like a 1970 vintage, whatever it was, 72 units or something like that. And there was a laundromat next door. And in the beginning of the video, I walk out like on the cell phone talking to Raj. And I'm like, no, Raj, like retrade's not going to fly. Sorry, whatever I said. But, and that's not going to fly like if I'm dealing with, the Blackstones of the world. So I've tried to take a different approach in that perspective, from podcasting. I've always done a newsletter, like a monthly newsletter. I've kind of transitioned that recently as the market slowed down to a weekly newsletter. Not that I've built on that database, but generally it's owners in Dallas, Fort Worth. But the podcast is very different. There's not a lot of brokers out there doing podcasts, and generally mine's not have syndicators such as yourself. It's a lot of times, okay, how do I provide value to these syndicators through information? So a lot of times it's, property tax attorneys, it's insurance brokers, it's, debt originators or brokers, whatever the case may be, and just trying to get a sense of actually what's going on in the market. And then I put that on the newsletter. So I don't know, through that and just trying to consistently, I kind of hate that term, it's overused, but provide value through social media. I tell everyone it's really just having unique stories to share and posting on a regular basis. It's like, in my opinion, social media is not that hard to build a following. You just got to take, again, it's like discipline. You just got to take action on it.
Yeah, little things, right?
When it keeps you top of mind. I mean, and most of, pretty much you're only on LinkedIn from the social media aspect. Yeah. So
with that, not that I've coined it, but I've heard the presence pyramid. So where the bottom of the pyramid is your broad base. So it's going to be your social media. And that's the thing. Like, I just want to hit specifically owners of multifamily so many times, whether it be through direct mail postcards to social media to phone calls or whatever the medium may be. I just want to hit them so many times, even whether it's on just listed, closing, and they're like, gosh, like I just always see Mark Allen's name. So you stay top of mind. Yeah. So, and that's generally been my approach.
Yeah. Love that. You said something a second ago, and I don't mean to shift gears, but I wanted to touch on it before we even, before I lost that train of thought, talking about, your newsletter and keeping owners informed of what's going on in the market and things like that. I feel like this particular market environment, I've talked about this a lot with people. The only outlook, I think, that is incorrect about this particular market environment is the one that you're absolutely sure of. I've never been less positive about where things are headed, I think. So we've been very conservative in our underwriting and the deals that we're doing and things like that. How have you seen the evolution of the market in, regards to your conversations with owners and things like that? Of the last 12 months of the market, what have you seen evolving, and what is your kind of general outlook on things right now?
Yeah, well, I'll take it back a little bit further. So in 2022, the conversations were more like, hey, I promised my investors a 15%, levered IRR or whatever the case may be. I can't deliver an 8. In 2023, it was, hey, I can't lose my investors' money. I want to at least break even or plus. And then now it's to a point where I think it's like really just trying to preserve as much capital as possible. Yeah. And there's, not to go into it. There's a lot of people that try to predict interest rates. I don't know what's going to happen. I read a lot of things about, bear steepener, the yield curve, the Fed potentially cut rates, but term premium of bonds go up. And so, and the long end of the yield curve, continues to rise. I guess it's all to be determined. But generally, I feel like we're getting pretty close to, a bottom. And maybe it's not this year. I think, maybe this year, maybe next year. I think the expectation in the future is that you've got a ton of supply that's been delivered. That's, there were starts in maybe 2020 or 2021. So there's a lot of new multifamily supply delivering, which, is affecting some of the workforce housing space. But the rent delta is so, drastic. Usually it's $500-$600 plus and kind of a rental delta there. But, it is affecting some of the workforce. And there's going to be a supply glut. So I think that's the general thesis. Yeah. So the expectation is we look up in 2027 and there's like no new deliveries. We still have all these people coming and moving to Dallas-Fort Worth. And there's a supply-demand imbalance. And we see rents start to really grow. And if you talk to, just having some conversations like on Audra, with some of the institutional players, some of them are underwriting like going in this year negative rent growth, but then next year, like this is over a 5-year period, then next year maybe it's flat, and then the year after that it's 7%, and then maybe 5%. I was talking and doing the math. I'm like, yeah, but if you take an average, that's 3% growth over the 5 years. Like I know you start negative, but then you go to 7. So generally, and that's how we underwrite, which just 3% with inflation, and historically, that's what rent growth is. So I think that's
a different path to get there now.
Yeah.
That makes perfect sense, and I think that we're very similar in the way that we're underwriting things right now, and we have a very similar thesis around supply. New units coming online, and then what that's going to look like a few years from now. And it's you talk about trying to catch a falling knife when you're trying to predict a bottom, and nobody wants to do that. But I think that if you buy conservatively in all market environments and you play with the variables that are on the table at any given moment, it's very hard to predict a bottom. It's really hard to predict the beginning of the next bull run too. So if you're waiting for the supply to dry up before you start buying and trying to take advantage of rent growth on the backside of all the new supply coming on, you may have already missed the boat by 6 months. And so we try to underwrite in a way that we're playing with the market variables that are given to us at the time and be as conservative as possible. It's so difficult to predict where the market's ever going to go. You got to work with the variables that you're given.
Yeah, and that's one thing I got to give us some kudos for. I think in just the last 12 months, our underwriting has evolved exponentially, right? Like we're looking at supply at the zip code level now and really kind of charting out where the rent growth really starts to happen. To your point, Mark, this is, at least Dallas, we're going to get inundated with new supply this year and even into early next year, but there's like no new building permits filed right now. So when that supply comes online, and by the way, we're doing a really good job absorbing a lot of this new supply already. Yep. When that dries up and another 150,000 people move here next year and this year and next year, et cetera, I think we're going to be in a much better situation. But the first piece of investing guidance is you always get is never try and time the market.
Exactly.
Right? You're never going to be perfectly right.
Yeah.
I feel very comfortable right now. I think we feel very comfortable right now with our underwriting strategies, knowing that if this isn't the bottom, it's probably going to happen this year, right? Barring some sort of geopolitical fiasco. There's enough financial criteria and enough data out there that suggests that, if inflation stays in check, we'll start to get some relief. And frankly, I think we'll get some kind of relief before the election, just to bolster whoever ends up, running against each other.
Yeah. I heard something the other day, just having a conversation, but they're like, this guy's been, 40 years in the market, and he says it's interesting because, you can look at all the recessionary periods, just like we are now, and it was tough to make deals pencil. And it's the same thing now. So people, I can't make sense of deals. But then 5 years goes past, and they're like, man, I should have bought more at that time. So, it's kind of an interesting thing.
Hindsight's 2020. And I do want to ask about the offers because one thing, you are my broker on my Denton developments, and you're having a ton of tours, right? Somewhere, I think you said, I don't even remember, like you had like over 170 people just sign the NDA, which to me, I don't know if that's a lot or not. Is it?
Yeah. So the BTR townhome product, there's some multifamily funds out there, some multifamily players that just aren't interested in the product. So I think you probably get more demand for multifamily in particular, but the other piece, specifically, not to get into details, but there's a construction component to it. So it's finding that hybrid buyer potentially that can not only buy the stabilized product, but construct the remaining townhomes.
So speaking of that, you're taking people on tours, and then you've got these groups that will, when you do a call for offers, that they make their offers. Is there, something that we worry about, as partners at Deep Blue, one thing that Matt and Brian and I have always talked about is like, we don't want to piss off the broker by coming in, just always being the lowball bidder.
Yeah.
Like, we didn't want to be on that quote unquote blacklist. So what are you seeing now versus the last couple of years of investors making their offers and making sure that an up and coming group doesn't maybe end up on this kind of blacklist per se?
It's a variety. So in this, I'm going to say the workforce housing space in particular, like sub 20, you always have tire kickers at the end of the day. I feel like there's less, once you get into a higher sophistication level. But our job as brokers, as listing brokers, and again, this is very different from, maybe even smaller multifamily. You find, more co-brokering or less sophistication going on, like maybe the sub $3 million space. But generally, these buyers are very sophisticated. They're kind of represented by their attorneys, going in. So our job as a listing broker is to create a market. And so we're typically running a 30, 35-day marketing process followed by a bid, a date set for bids due, or a call for offers date. And then, what we'll do is it's like an investment banking process where you then narrow it down. You're interviewing, the buyers, understanding how they're looking at the deal. You're ultimately providing a recommendation to the seller, but your neck, your reputation is on the line. And as a listing broker, it's a lot of pressure for me because you're entrusting me with $30 million of your own assets. So I take that very seriously. But it's up to, it's going to be ultimately up to the seller, but they're going to trust in our recommendation after going through that process. And, generally the bid range is wider in today's market, maybe than it has been in years past. But I don't think we blacklist anyone. There's maybe people that in the back of our mind, like we know that they're tire kickers and, probably not going to spend as much time with them as more serious buyers. But, some brokers have a blacklist, but it's usually not to get into this, but I think that blacklist is when they, they're crossed and, the relationship is ruined. Maybe they do something behind their back, like go around them to a seller, or, maybe some brokers are very particular about if you sold them the deal, like you better sell it with me. And if you don't do that, you're blacklisted. Yeah. So I've heard that.
Interesting.
Yeah.
Actually,
Somebody just mentioned that on the show
about to say that.
Yeah. A couple weeks ago. Yeah.
So, I mean, in that same vein, right? You just talked about the bid being a little bit wider than it has in years past. People view deals very differently. They view where the market is headed very differently, and that makes deals pencil differently in people's minds. One of the things that I think is so key about the multifamily space as opposed to single family investment, for example, is that the barriers to entry can be higher, but the relationships are so much more important. For me to be the first guy that a single family wholesaler sends deals to and to get that edge, I've got to do like 20 deals with that guy because most people can afford a $350,000 investment property in North Texas. And so the buyer pool is wider. I don't need to have that exclusivity with you if I'm a wholesaler. I'm going to get offers. It's going to be easy, right? Once I close a few deals in the multifamily space, that's a higher barrier to entry. My broker relations become very important. I can get a little bit more of an advantage to continue to build my portfolio and get opportunities if I can close. But where I think a lot of people get a little nervous or sideways is when deals aren't penciling for them, they don't continue the broker relationship. One of the things that we do that I think has continued to help us solidify broker relationships is you and I will reach out to brokers when deals don't pencil, and we voluntarily say, can you jump on a call with us for 15 minutes? We'd love to work through our model with you.
Yeah.
You see it one way, we see it another. We want you to know that we're interested. We're way lower than what your guys' whisper is. We're way lower than the BPO or whatever it is. But we don't want to just throw some BS LOI out that makes you think lesser or damages our relationship in any way, shape, or form. We'd love to spend time with you walking through our thought process and our assumptions and things like that. And I feel like a lot of buyers don't do that.
Yeah.
What other tips do you have for a buyer that doesn't want to feel like they're losing their grip on their broker relations, but deals aren't penciling for them right now, to kind of continue to maintain that communication process?
I mean, I was just trying to rack my brain a little bit, but I mean, generally that's good. It's helpful because there's a lot of times I just get, we'll get offers and, no feedback. Generally, through the process, it's like I view it as a sales funnel. So it's like the first 2 weeks really trying to drive the top end of the funnel and get people in the door. Then it's like, okay, let's get them on site and start having conversations about how they're looking at the deal, price feedback. Okay, well, how are you underwriting it? Pull data and information as far as, here are our assumptions with rent growth. Here's, exit cap rate or whatever the case may be. And then, potentially I'm able to leverage that with, other buyers and say, well, this is how, they're taking a look at the deal too. But I mean, generally, like, you guys want to buy. People want to buy if they're in the market right now. So I think that's always a good tactic is, just being transparent with the broker and say, this is how we're looking at the deal. Ultimately, it's going to be your decision at the end of the day. You're the ones raising the equity. And you got to know, I guess, what you and your equity is going to be comfortable with as far as assumptions, because that's what they are. They're assumptions. They're they're pulling out of the air, and you're making your best guess based on the data that you have available.
Yeah, agreed. And I think that that's just having that confidence in your underwriting as a buyer and just understand, like, Mark's not going to get offended that we see things differently on a deal, right? But I think a lot of buyers don't provide that feedback. They just kind of just don't communicate anymore. We were on the phone with a broker. I was on the phone with a broker the other day that we were looking at a deal in Temple, and I was like, look, we just don't have rent growth projected anywhere near where you guys do. We're going to pass.
Yeah.
It was
As a matter of fact, it was half.
It was, yeah. And it was,
not even close.
We'd love to get you on the next one for sure. But having that conversation, even though it's a conversation around us not being interested in the deal, it preserves and enhances that relationship because now they know a little bit more about how we see the market, a little bit more about our buy box, and we can continue to build on that rather than, that deal doesn't work. Let's just pass. Let's not even communicate. Let's just get back in our email inbox and start underwriting the next one.
Yeah, and I think data is kind of a very important commonality between buyers and brokers, right? Like, I think you guys work with an analyst, right, to put together your BPO and put together your underwriting and the OMs and stuff. And ultimately, they're looking at their data sources to help you put that BPO together. We're looking at our data sources, and is there a difference between CoStar and RealPage? Maybe, right? Is there a difference between using, MLS comps versus Zillow? Most definitely, right? And you kind of got to know that at the end of the day, the offer itself is based upon valid data, as opposed to just saying 10 million, entry cap 7.5% all day, and then you just get laughed at because there's nothing to support your opinion. Yeah, exactly. Right?
Yeah, no, it's good to at least, even if you don't set up the call to say, hey, these are some of our assumptions and this is how we're looking at it, because to get blind feedback like, hey, we're around this, we're gonna be low. I tell all of our brokers, like, hey, if at any point, if they're a reputable buyer, we should ask, how are you getting to that number? You should never let someone go by and say, if the price guidance is 20 million and they're coming at 15, well, how are you getting to that number? Like, you need to hop on a call, or you at least need to have an email with some of those assumptions and check them, because there's been a lot of times, again, buyers want to buy deals, but there's been times where it's like, oh, I look, and some people will send me their model, and I'll look at it. I'm like, well, you jacked up, this. I've found like errors in their model, or it's like, hey, well, I really think, just for example, like demand pricing, like these two comps right here they're charging $15 more for downstairs units, like, but you're not, like, it's low hanging fruit. It's something easy. And, again, at the end of the day, the sponsor or syndicator is going to make the decision whether they are willing to bite off on that risk and do that.
How are you now working? Because as we've gone through this shift, right? Whether this year's the bottom or next year is, how are you working through this seller's mindset? Because look, on the multifamily side, everyone says it's all numbers and less emotion, but when you're selling there's emotions involved, especially if they're not hitting their returns, or they're not making their money, or if it's a single owner, not syndicated out in a group, they put probably their blood, sweat, and tears into that. So how are you kind of working and educating your client base on the selling side?
Yeah, our job is to create the market. I can't determine it, but our job is to broadly expose it, reel in all the offers, and hopefully early on too set realistic expectations. And we're particular about that. There's a lot of time, money, and resources that go into these listings. So we don't want to waste our time just as much as we don't want to waste the seller's time. And it's frustrating as a broker right now because I have like 5 instances I can name in the last year on my hand where it's like, other brokers are 15 to 20% higher on us. Then they go through the marketing process, and all the offers are at or below like our value. And so I always do that follow up. Hey, how did the offers shake out? And ultimately see where it trades. And I think a lot of brokers right now are trying to we call it buy the listing. I'm sure it's the same in residential. Just kind of tee off on that motivation, just say, sorry, this is where the market is. So we've taken a little bit different approach, and hopefully relationship trumps that, and it has sometimes, but we pride ourselves in that. Our list to close ratio last year, out of all the deals we put out, 14 of 18 listings, which leads the market. So, there's some brokerages out there that are pumping out deals every week, but none of them are selling. They've got, less than a 25% success ratio, and big, the firms you guys all know too. So,
wow.
Yeah. 25%, damn. It's crazy.
I don't know if that answers your question.
No, it does. It does. And
they're tough conversations.
They're tough conversations. And that's number one, I expect to hear that. And full transparency, this is something that Mark's worked on me, and not from an emotional standpoint, but we took ours.
Wait, who wasn't emotional? You or Mark?
Both of us. I can tell you, Mark is not as. I mess with Mark all the time. He's not that emotional, he's you're very even keel. Like it's hard to get a rise out of you. And I tested it out on one, and I'll have to tell the story offline. But I don't think you want me to tell that story. But when we were going and taking our product to market, this was last year. We accepted an LOI, and then we went through the full dating process. And then at the end of it, because of rates, they retraded us at, to me, a much lower rate than I believe should have been there. And they weren't willing. We were willing to come down, but they weren't willing to even meet us halfway. So, and it didn't. I'm sure Mark's disappointed in that. He took time away from his family and everything else, but he doesn't let that get into the way of the relationship. So, to me, the way that I see it, especially on the commercial side or the multifamily side, is that relationship with the broker is the most important thing, and then from there, hopefully, they have a great Rolodex. Because I've been hit up on my stuff that they were trying, like I had other people trying to market my stuff, and I'm like, whoa, what's going on? Mark's my guy.
Yeah.
And when we officially took this to market, how long was it before we officially went live? Like, this was probably 6 to 8 months, maybe 8 to 12 months in terms of before we officially took it out to the open market.
Yeah, I think we were just kind of quietly shopping it to 20 buyers or so, and had some some pretty good feedback at the time. And so again, I think it helped maybe set expectations up front. That's why I told you, I was like, hey, I really think this is where the value is based on the feedback that I'm getting. So I don't want again, I don't want to waste your time, just like I don't want to waste ours. So
when he's not talking out of his ass.
Yeah.
Right. Like it's this is the feedback, and then we've taken it to. Then we officially taken it to market at somewhere around where that feedback has been, and so, the tours have been there. Hopefully, the offers will be there. So
yeah,
so
we got to tell this story real quick.
Go
I
ahead.
had a tour last week, and there's a Chinese investor, big built-to-rent player here in Texas, flew in from China and pulled up at the tour in a Maybach with a driver. So a guy gets out in a T-shirt. I'm like, surely that's not him. And then he walks around and he opens the door for the investor. And long story short, I mean, they're really interested, and they're going to make. They have a big Chinese fund, and they're going to make an all cash offer. So, yeah, looking forward to that offer.
yeah,
Dude was not comfortable getting a G-Wagon. He had to get a Maybach on the other side waiting for him.
I mean,
when he got in.
if you got it like that, you might as well go with it, right?
I mean, is that future Deep Blue tours
Yeah, right.
absolutely, absolutely.
and a Kia Soul?
With Nick's face on it, like
Yeah.
the old
Yes.
good home team car.
Yes. So Nick, I mean, let's talk about this through your eyes, right? As a client of Mark's, and kind of going through this process for an elongated, longer than expected period of time, right? No fault of yours or Mark's. But what was it like on the seller side as Mark set expectations with you, and you're fending off kind of Mark's competition for him? What was that experience like for you? And are you satisfied, right, with the opinions and expectations that Mark has set?
Actually, it was Nick's fault. He had a listing agreement in front of him for 7 months.
Yeah.
That's so on brand.
Yeah.
Nick, no.
No, 100% my fault on taking it to official listing. But, my story is probably unlike others. I mean, if you go back and listen to my whatever episode that was where we do a deep dive on me, my brother's the one that started this project. I met Mark through my brother, and they had a really tight relationship. And so there was a little bit of, as Mark put that listing agreement in front of me, I'm processing, a death of a brother and a business partner, and taking over a project that was completely his. So a little bit there is some delays on my end, no fault to Mark's. And I will tell you that through this whole time, there's been no pressure to list. There's been no pressure. I mean, the time that Mark has spent with me, educating me, if I'm doing it on the residential side, I would already thrown the towel in. Now, has there, even when I've disagreed with maybe some of their pricing strategies, and it's not his, it's we've taken it to a whisper price and everything else. I've always taken the feedback and then said, well, I mean, knowing what I know now from just the residential investment game that we've been in for a long time and just selling a lot of residential houses, we as sellers and brokers do not make the market. The buyers make it. So was I happy with it? No. Right. And it's not Mark's fault.
Right.
But he's done everything. I'm 1,000% satisfied. I've had other brokers hit me up. I've had brokers, bring, text me with maybe a fake buyer and want to do a tour. Then I find out they're really trying to get in front of me from a listing side of things. And I always bounce it off of Mark anyway. And so from that angle, it's, when I finally signed that 7-month-old listing agreement, the process just was flawless. I mean, he's worked with my property management company. He's pretty much done the legwork. I'm just here just telling everyone else what to do. And he keeps me updated on how many NDAs that were signed, how many tours. We've even worked the touring schedule because we were touring people on Fridays, but the trash day's Thursday. So, we want to make sure that from a first impression look that, there's not trash, just from the trash company not doing their part. We've worked on making sure that, during this time and when we listed, I mean, we're in that middle of dead grass and weed season. So we've worked on improving all that, and that's based on what Mark's told me. So, I mean, there's no one else I would use in this game, not on the multifamily side.
Yeah, and part of my value is, not wasting the seller's time. So fortunately, Nick's got a good team, and so I'm constantly like in communication with those guys, so I can stay out of Nick's hair, and you guys can buy deals.
Yeah.
But
Thanks,
not
Mark.
that you asked, but generally it's fun to work. I mean, I work with a lot of different personality types and people, and Austin was one that I really just got along because I think we had a lot of similar interests, and we're similar age. There's a lot of folks in the business that I work with that are in their 50s, 60s, and 70s, and so it's like cool to work together because I feel like you guys, I mean, even the way you sit, there's a lot of similarities, but
Yeah.
But in Austin in particular, like it always made me really emotional because he was the only one to ever say it, and you've kind of said it too, and maybe it's just from the residential background, but it's like he introduced me like, this is my broker, and that always stuck with me because no one said like, this is my guy, this is my broker.
Yeah, I mean, we're loyal people, right? So I'm a believer that if we stick with one, if we build a relationship with one person, that it's going to come back, more, and pay everyone, like everyone involved. Like, I mean, I don't even know what you're charging me commission wise, but I was like, whatever it is.
Yes, you do.
No, I really don't. Whatever I signed.
It was super fair.
Yeah, super fair. And I didn't I'd not fight. I mean, everyone deserves to make their money,
Yeah.
right? And so the way that I look at this is these people stuck around during a tough time, and they didn't try to pardon my French on the fuck me over.
Yeah.
Right. And so I look at people based on character and then how they've educated it and not pressure. And so from a seller side, that to me is super important. And then educating along the way and saying like, look, we're not going to get the price that you're wanting. I know that you want that price. I know, as you told your story earlier about some of these sellers that in 23, they wanted to break even or maybe make a little bit. 24, they're just trying to preserve as much of their investor capital. That's kind of the process we're working through in certain things, is like how much we're kind of working through. Can we break even or preserve capital in certain of these deal flows? The other ones are some of our legacy products that we put our blood, sweat, and tears in that one. Can we maximize a return on that and still make it worthwhile? Even when Mark walked in earlier, I said, "Hey, I've got this other product. Can we snowball it in together and see if it increases our odds of selling?" And it's just finding winning solutions, and he's just willing to, this one, like I always say in some of our other podcasts on our residential side, money changes hands when problems are solved.
Yeah.
This one just has a lot of problems. So Mark's over here trying to solve the problems, and then if we can get it done, then we have a deal. And he sold several of my Section 8 portfolios last year, got that done. We need to talk to that owner, by the way. I have a warrant out for my arrest. So I might be in jail on the next podcast, but
It's cool.
all good.
We're used to it.
Yeah. But I mean, look, this wasn't a podcast designed to endorse you, because we have other brokers that want to be on this show, but you're my guy.
Much appreciated.
Yep.
Much appreciated. Yeah. Getting real emotional over here.
Yep.
But no, it's been fun. Like I said, I enjoy working with you. I'd at this point, like, I'd rather work with folks that I enjoy working with and want to spend time with. And so that makes the business more fun. And it also makes it more fun when it's like you're not on a transaction hamster wheel and you feel like you're part of the team.
Yeah.
So, when we do a deal together and, I can actually help advise, I think that's where it's like, hey, I feel like I'm actually like part of the ownership team here. And it's like, okay, you're here at point A. How do we get to point B? And maybe there's certain things we can do from an operational perspective to get
Now
there.
you just got to
That's when
sell
it's fun.
us a deal.
That's it.
Yeah.
It'll happen.
Yep. And the next 18 months will happen.
Yes. I have a text message. I think he's trying.
Oh, there you
Oh,
go.
Yes.
awesome.
There was a text message just before the show.
Read it. Read it live on the show.
Huh? Really?
No.
No, they're going to give away our secrets.
Yeah.
Exactly.
Yeah.
So Mark, I know we're coming up on time here. A couple final questions, right? When you look at your transactions from 2021, early 2022 into 2023, 2024, there's clearly a difference. But have you been able to quantify or measure any sort of like material changes in valuations or cap rate decompressions in certain areas that you think would be good for buyers to be aware of?
Yeah, I mean, generally, I was looking at some of our data, and our average cap rate on sale on sub $20 million deals is 3.75. It was 3.74, and I mean, the smaller the deal, I think the more demand there is, because not only do you have private capital, just investors, maybe it's 2 or 3 getting together or someone using their own money, but you also have syndicators, and there's just different motivations there than some of the capital allocators in the institutional space.
Mm-hmm.
So I don't know. I mean, that space is it. I mean, I think there's the ability to create more alpha because there's a lot more off-market trades. And there's a lot of mismanagement maybe in some of the sub 100 unit. But generally, like, the higher cap rates, I guess, are going to be in some of the larger deals.
Mm-hmm.
And, frankly, I mean, I think a lot of the 60, 70 stuff that's, 250, 300 plus units, it's tough to raise the money on that. Like, there's not JV equity out there that wants, those Class C properties. Or at least that's going to get aggressive on it, I should say. So most of those folks are either getting pref equity or they're raising it from friends and family or their network. And so it's tough to raise, 10, 15, $20 million for a deal that size. Not sure if that answers your question.
Definitely helps. Definitely helps.
I mean, as far as submarkets go, I mean, naturally you're going to have more demand for higher quality assets and higher quality locations. So, a similar a 1980s construction property in South Dallas is going to have less demand than, Denton, Texas. It's just, especially right now, I feel like there's maybe more risk in some of the higher crime, lower income areas, where we're at today. But, with that, maybe there's more opportunity too. Because there's not as many bidders. Maybe you can come in if that's your forte and you're really good at operating those properties, then it could make a lot of sense, But it's not for everyone.
Yeah.
And what are you seeing? Because you see a lot of P&Ls and kind of behind the scenes, the books. So most of these operators, mom and pop investors, whatever it is, when you're looking at their books, where do you see maybe the mistakes that are happening? That's they're leaving money on the table.
I feel like buyers may be a little more conservative in their underwriting. So it's like something, if they're not cleaning up as far as capitalizing certain replacements or whatnot, and maybe their R&M and turnover expense is $1,500 a unit, I feel like they're going to get dinged there. So I mean, we generally, and sometimes it's more difficult than others depending on who the owner is and how they're keeping their books. But generally we try to clean that up prior. I mean, the other thing sometimes, like, cash versus accrual, like your books are your cash, but generally it's quality property. There's not a lot of delinquent, residents there. But it's easy, like on an accrual basis, some people will push off. And I mean, this was kind of the case with Sawyer's Mill, where, there were people that were delinquent for 4, 5, 6 months, and he wasn't writing it off as bad debt. Just to say, hey, maybe who knows? Maybe they come across the money, maybe I collect it. But if you look at the cash T12 versus the accrual is going to be a heck of a lot better. So, like on that deal in particular, total collections on an accrual basis were, right before we sold it, maybe $155,000. But if you look at the cash, it was $130,000. So as buyers, I think it's if you get an accrual T12, it's good to get a bad debt or delinquency report or age receivables, kind of the same thing, or cash T12 if they'll provide that up front, and most will, I think, in this environment.
Interesting. What for syndicators that are kind of coming into the game now or trying to ramp up, seizing some opportunities, maybe they don't have larger portfolios, what advice would you give them on how to be successful working with great brokers like you in this market?
Yeah, it's hard to break into this market in Dallas-Fort Worth, and I'm pretty much maybe it's been a little bit easier than years past. Like, Houston, for example, doesn't have near as many bids as we do on properties.
Really?
So because of that, maybe it's a little bit easier to break in. But generally, I always advise, like, if you can start with a smaller property or something out in like a tertiary market, Abilene or I don't know, Lubbock or something like that, and then prove yourself, and then it's like it helps in your chances to be able to close a deal. I mean, the biggest thing today is like, can you raise the equity? Yeah. As a listing broker for me. And so there's even folks that could, raise $20-30 million at the peak of the market, no problem. But today they'll struggle to raise $5 million. So it's, I think it becomes a little more difficult to vet that out. But, generally, I mean, this community is small. I think it helps to have, our GRA company, we've got 12 offices across the country. And it was interesting. I got a call 2 weeks ago, and they said, hey, we've got, best and final. We've got a couple of different bidders. And this guy's out of Dallas. Dallas, do you know him? And I was like, yeah, check the notes in our shared CRM. I was like, he put a deal under contract with us. I mean, granted, it was a really tough pocket and location, and it came with a big retrade. And I put some of those notes in there. But anyways, I was just able to say, hey, this is what happened. He was looking for, frankly, we didn't have too many bidders that were all that qualified on it. And fortunately, I had a buyer circle back around, pick up the deal and close it. But some of that information is helpful, and I guess what I'm saying is reputation really matters.
Yeah.
So, something like that isn't out in the ethers, but I go to a networking event, I hear from a lender, hey, this buyer did this. I see my fellow listing brokers at other events, and we chat, like, hey, you got any stories or whatever the case may be, and they're sharing stuff too. So I think it's helpful because your reputation precedes you, and that's not only on your ability to close, but how you transact too. Like someone that's really good communicating throughout a transaction and is very easy to deal with. And I get it from, like, sometimes I'm like, gosh, this is such a pain. I can't believe the buyer's asking this. Or, yesterday I was dealing, they were trying to extend the inspection period because, they were waiting on 3 leases to be signed. I'm like, man, this is so petty. But I'm like, I was like, at the same time, I gotta be, put myself in the buyer's shoes a little bit, but, and it's not the same market too. I don't rattle cages as much as I used to, because we don't want deals to fall apart. But
yeah,
fair enough.
So
nice, good stuff.
Yeah,
man, Mark, appreciate the time, brother. This has been super insightful. We love, look. Our relationship with you has been fantastic. We love having you on the show. We'd love to have you back, man, and continue to share as the market continues to evolve. Where can people find you? Where can people connect with you?
Best is you can send me an email, mark.allen@grea.com. Our website is grea.com. You can easily see all the properties we have listed for sale if there's any buyers, not to create more competition for you guys. Or you can reach out to me on LinkedIn, and I don't know what my LinkedIn address is, but Mark
Search
Allen,
Mark
GREA.
Allen.
Yeah.
Yeah, thanks for having me, guys.
Mark
Appreciate
is
it.
like all over LinkedIn. I gotta give you a shout out for that. I see him every day. I voted on one of his surveys today and checked it again. Apparently, nobody knows what direction the market's going to be in 2025 based on the responses Mark got. But dude, I think you're doing honestly I think you're doing a great job on LinkedIn. It's something the three of us are super passionate about, and it's been awesome to watch you grow, man. Seriously,
Thanks, I appreciate that.
super meteoric rise.
Yeah, I got to get you guys added to the weekly newsletter. But
Please do.
Once a month I do that. I do a poll and I just put the poll results. You see it on LinkedIn, but I try to get weekly sentiment on there from lenders, and I don't name names, but generally I share who said the quote, from special servicers, from equity, from other vendors, title companies, what kind of activity they're seeing. And so you guys are plugged in the market, but I think for some it's really valuable just to see exactly what we're seeing and hearing in the marketplace.
Absolutely, brother.
Nice.
Go follow Mark on LinkedIn. Make sure you connect. That was episode
38.
Nailed it. Check out deepbluere.com. Check out tourstudios.com. Oh, he's going to do something with the mug.
Look,
I was
Go to
gonna
tourstudios.com. You can buy one of these for $14.99.
There you go.
For an extra $2, Jesse will autograph it for you.
There you go. Exactly.
That means they go on eBay.
Exactly. Check out tourstudios.com. Episode 38 in the can. Mark, thanks for hanging out, brother. We'll have to do it again soon.
Thanks, guys. Appreciate it.
Thank you.
Thanks, everybody.